Good afternoon, folks. Andrew Schartenberg here, your mortgage engineer. Today is Tuesday, February 15th. I hope everyone had a fantastic Valentine's Day. I'm here with your rate report and homebuyer tip of the day, and things are looking up for us, and I should say down actually. In the rate market, the mortgage rate market today, we are looking at on the conventional Fannie Mae and Freddie Mac fixed rate 30-year loans, 0 point perfect scenarios. Probably an average of about 4.875%. On FHA and VA government loans, again, 30-year fixed, 0 point perfect scenario loans, you're talking 4.75%. So the FHA stayed pretty much the same. They tend not to move as much. And conventional came down by about an eighth of a percentage point. So again, we're staying in the high 4, low 5% range, and the reason that they came down a slight amount today was that there was a piece of economic data released, the monthly retail sales, which showed that in January retail sales gained, but not as much as expected by analysts. So that is considered good news for the bond market, and thus mortgage rates came down a little bit. The yield on the 10-year Treasury is at 3.62% as of this afternoon. Yesterday it was at about 3.61%, so it really hasn't moved very much at all. And again, we're still above that big 3.5% range. And if you want to see mortgage rates come down significantly, we're certainly going to need to move into the low 3s and high 2s. Basically, what you're going to want to see for that to happen is negative economic data to come out. Lately it's been choppy, if a little bit positive, so that's why we've seen rates creep up to the high 4s. So that is your rates for the day. Home buyer tip of the day is beware the media, guys. When you're out there, you're looking around, and you just are paying attention, and you see the newspapers, you see the nightly news, you see online advertisements when you're clicking through websites advertising mortgage rates. Typically, a lot of times you're going to see rates that are not up to date. They can be as much as a week behind, and they're also not necessarily taking into account certain points and fees. Typically, when you see rates quoted by the media, they're going to include points of about usually somewhere between 3/4 and 1%. So those are not necessarily going to be your 0 point rates. And that's why you're going to see them typically be slightly lower than what we're quoting here. We quote 0 point rates. When you buy points, you're going to buy your rate down a little bit, and what you see in the media is going to be typically national averages, and they're going to be surveyed by some of the larger institutions out there, so not necessarily your local banks or mortgage brokers, or even loan originators at some of the bigger institutions that can get certainly what we call more acute with pricing. We can sharpen our pencils, and the main reason being is that we in the industry mostly rely on referrals for our business, so we need to offer good deals to consumers out there. Most of us that are left, I like to think, do offer good deals. So that's pretty much it on my kind of cautionary tale. Just if you really want to get the lowdown on rates, obviously watch my rate report on a daily basis, or go talk to your real estate and mortgage professionals and see where they are. Rates do change every day, so it's important that you keep yourself up to date. All right, folks, stay warm out there. We'll see you tomorrow with your rate report and home buyer tip of the day. As always, my contact email follows, or contact info follows. So if you ever have specific questions, don't hesitate to get in touch.